So hello everyone. This is the first topic that we are going to discuss in pre-final. We have tax on partnerships. So we're done with tax on individuals now, general principles and tax individuals. So this we are going to discuss about partnerships, estates, and trust, and if malabutan si corporation, then we can include that to pre-final, or if not, tax for corporate taxpayers will be included in the final term together with the BIR forms. So we'll see if dinta kutob sini sa aton nga discussion. But we have here first tax on partnerships. So we have two classification of partnerships for income tax purposes. We have ordinary partnership and the general professional partnership, or the GPP. Ordinary partnership, this partnership is partnership in trade, no? Gintukod ni sang partnership for business, no, to earn profit and not for the exercise of professions such as doctors, no, accountants, lawyers, no. Mamo sina, kay ang tawag sina naman sa ilaya is general professional partnership. Okay? Ang general professional partnership or GPP is created, no, or yes, created for the exercise of profession. Okay? So muna siya ang GPP. So an ordinary partnership or any form of partnership except GPP is taxed the same manner as corporation. Okay? Ginword ko class para ma-highlightan. Kag ma-highlightan yung manda sa inyong module. So ordinary partnership, they are taxed the same manner as a corporation. Therefore, ang ilang taxable income is subject to 30% tax rate. Amo na sa class, ordinary partnership. So the taxable income of the partnership less income tax thereon is the distributable net income of the partnership. When we speak of distributable income of the partnership, amo na sa klasang income nga pwede naton mahatag sa mga partners, no, under the ordinary partnership. Taxable income less the income tax. So if 30% income tax, now to be simple, 100,000, for example, is the taxable income. 30% of that is the tax. That would be 30,000. So 100,000 less 30,000, that would be 70,000. Si 70,000 na ang distributable net income of the partnership, or the 70% of the taxable income if ang income tax naton is 30%. Okay? So the share of the partner in the partnership's distributable net income of a year, even if not actually received, will be considered constructively received by the partner in the same year that the net income of the partnership is determined. Ang ginamin niya natin, whether or not gin-distribute actual nga gin-distribute ang net income, whether or not that will be considered as constructively received by the partner in the same year that the net income of the partnership is determined. Net income for 2020, net distributable, whether or not that net income is actually received by the partner, that will be considered as constructively received by that particular partner in the year 2020. Net income ni 2020 will be constructively received by the partner in the year 2020, no? Whether gin baton or wala pa na baton ni partner. So nasa class. Next is GPP. GPP is exempt from income tax. General professional partnerships is exempt from income tax of 30%, provided that it is engaged exclusively for exercise of profession. Otherwise, that partnership will be considered as ordinary partnership. Okay, GPP is created exclusively for exercise of professions such as doctors, lawyers, accountants, engineers, and whatsoever. No, same. Miss, if ano be, if gin si ano be, si accountant, di kag si doctor, naghimo sila partnership, miss. GPP na sila, miss. Although those 2 or 3 or 4 of them created a partnership, and that partnership is not exclusively engaged for the exercise of profession, ordinary partnership na kas nang ilaging tukod kung ano man ang negosyo ilaging tukod nga duwa. Kay if common sense, no, for example, si doktor kag si lawyer nag-create sila profession, wala ka man guro class kakita nga Dr. Reyes and Attorney De La Cruz law firm. So how could a doctor be in law? Do na black class? Do ka balik awot. So usually GPP is partnership with the same partner. Partnership consists of partners with the same in the same profession. No, mga sa class ang lawyers na bala makita ka mga Takandong Reyes and Associates. And meron pagid na ang diri sa wala ko kakita di sa Kabankanan if there is a partnership, but sa Bacolod may ara na da Balikas Lamboso auditing firm, so they are CPAs, Rojas Cruz Tagle and Company CPAs. Sa law naman niya Reyes and Reyes law firm, ano pagid, and so on sa kadamo. So mga class, they are GPP and they are exempt from income tax. No? And persons engaging, class, follow my cursor. Persons engaging in business as partners in a general professional partnership shall be liable for income tax only on their separate and individual capacities. Si GPP itself, di ba, if you could recall sa inyong basic accounting, si sole proprietor, si partnership, kag si corporation, they have their own distinct personality. Same man si GPP, kay under man na siya kay partnership. So si GPP, laini siya daw ka something separate entity. So as an entity, as a separate entity, it is exempt from income tax. But the persons consisting of that GPP are the ones who are liable for income tax on their separate and individual capacities. So ang income nga nakuha ni lawyer sa ilang GPP, no, sa ilang general professional partnership, no. For example, si GPP is consist of lawyers. 3 sila o 4 sila o 2 sila. Ang income nga nakuha nila as a GPP, amo na sa class, they will be the one to declare it in their income tax return, and they will be the one also liable to pay their own income taxes in which dira nakita na da ang income nga na-generate nila from the GPP. Okay? Amo ni siya ang second. For purposes of computing the distributive share of the partners, the net income of the partnership shall be computed in the same manner as a corporation. Paano kwaon ang net income ni corporation? Income less expenses equals net income. Yes, income less expenses equals net income. Divided by kung pila sila kabilog nga partners or based sa ilang partnership sharing, 40-60, 20-20-60, or 80-20, and so on. No, depende. But as to the computation of net income, same lang na siya as to how you compute your net income sa corporation. Okay? So each partner shall report as gross income his distributive share actually or constructively received in the net income of the partnership. A GPP is required to file a return of its income, setting forth the items of gross income and of deductions allowed by the National Internal Revenue Commission, and names, taxpayer identification number, addresses, and shares of the partner. As I've said a while ago, a GPP is a separate entity. May ngalan siya, basta registered siya as a separate entity sa BIR. So, even though it is exempt from income tax, it is still required to file an income tax return setting forth the items of gross income and the deductions allowed by the BIR, the names of the partners, their tax identification numbers, that's very important, and addresses and shares of the partners sa net income na nila makita. Kaya nga ining of BIR, ining of form nga gin submit or gin file ni GPP will be reconciled with the BIR form nga gin file ni partner, ni individual partners. Dira na i-check ni BIR whether or not ga-declare sa insakto si individual partners. Okay, for example, dira sa BIR form, sa tax form ni GPP nga gin-file, ang ginhatag ya kay partner A is 100,000, kag ang gin-declare ni partner A sa iyang separate income tax 50,000 lang. That will be subjected to investigation by BIR ina si partner A. So, muna sa class kasi BIR malagas ginaya class ang income sang tax. So, muna siya ang iyang purpose dira. No? And of course, for legality purposes, kinanglan gidya mag-file gidya ni business entities ang iyang income tax return, may balayran ka man or sa wala. Okay? Take note of that. We will have this example to understand further sa partnership taxation. We have here, KL partnership is a general partnership in trade. Miss GPP kay general partnership. Is this a GPP? General partnership in trade. That means this is an ordinary partnership. Okay? This is not for purposes of practicing your profession. Kay trade ni siya, mamaligya sila class. With partners, Mr. K married and Mr. L single. Sharing equally in the partnership net income. Take note of this. Sa problem, hindi na tanan equally class. May ara na 60-40, 50-50, 80-20, 70-30. Kung ano pa ginada nga mga income distribution schemes. Sharing equally in the partnership net income or loss. So in 2018, the partnership and the partners had the following data. Okay? Kadto tadi kay partnership. Partnership lang class. Si KL partnership nisa. Gross income ni partnership 1 million. Yeah, expenses is 600,000. Separate naman niya si partner K, 400,000 iya income, expenses niya is 250. Separate niya ni partner K nga income kag expenses. Miss halina sa sa partnership, wala pa class kay wala pa nato nabalaan ng net income ni partnership kag kung pila ang ilang distribution. Okay? Then partner L 520 naman niya iya gross income, iya expenses 300,000. Separate ni saya nga transactions ni partner L from the partnership. Question niya is the income tax of partnership. So as you could remember a while ago, ang mention ko, ordinary partnership or partnership in trade are subject to tax the same as a corporation. Therefore, it is subject to 30% tax rate. Ano nga figure pas ko unta? Iya ni partnership. We have here gross income 1 million, expenses of 600,000. Your net income is 400,000. Pila income tax? Multiply mo na sa 30%. Income tax ni KL partnership is 120,000. Class iya tax. So KL is an ordinary partnership, general partnership in trade ang gigamit niya nga term. Follow-up question. Pila iya nga distributable net income sa iya nga partners? Class buhen mo lang ni class ang 400,000 less 120,000, that would be 280,000 divided by 2. So that would be 140,000 each for partner K and partner L. Okay? Miss, ang ina bala miss ang gin-distribute kay partner K kag kay partner L. Subject man na siya miss sa tax. Ma-double taxation sa class, no? Nagbayad na tadik tax, nagbayad na si partnership tax sa 30%. Bayaran o pagid tax, mabayad pagid tax si partner K, si partner L. So, ma-double na sa karon, no? Double ano na siya. Double taxation na siya. So, that would be exempt na. Sorry, gid class sa kay mga puppies. Di sa akong tupad. Okay, importante matiyo na continue. Okay, next is problem number 2. Problem number 2. AJ partnership is a general professional partnership. So this is GPP na gidya class. With partners Anna and Jeanette sharing equally in the partnership net income or loss. The partnership has gross revenues of 600,000 and expenses of operations of 200,000 in 2018. Partner Anna, who is single, had personal income and expenses of 80,000 and 30,000 respectively in the same year. Janet, who is married, had personal income and expenses of 90,000 and 20,000 respectively in the same year. So the income tax of AJ partnership is, the question is, income tax of AJ partnership. It is 0 since GPP is exempt from income tax. No? Provided that it is engaged exclusively for exercise of profession. Persons engaging in business as partners in general professional partnership shall be liable for income tax only under separate and individual capacities. So, if i-distribute ang income, 600,000 is 200,000, that would be 400,000. So, tag 200,000 kay Ana, kag Janet. So sila na ang ma-declare sang 200,000 nila nga income, no? Sila na bala bayad sang ilang tax base naman niya. Dra ka naman class ma-apply sang imo knowledge sa individual taxation, no? Sa ilang nga duwa. Okay? So tax on estates, trust, so kunahin ka. So we're done with the taxation for ordinary partnership and GPP. Now to recap, ordinary partnership, those partnerships that are for profit and not for the exercise of profession, subject to 30% tax rate sa ilang net income. Si GPP naman niya itself is exempt from income tax. However, the partners consisting of that general professional partnership will be the one liable to declare and pay for the income taxes related to the income that they have acquired, no? From the GPP, they will be the one to declare and be liable to pay for the taxes from it, no? Taxes related to that income na nakuha nila from GPP. So, nasa class. So, tax on estates and trusts. So, estates and trusts are taxed in the same manner as individuals. Ano na sa misang estates, miss, kag trust, miss? If you are familiar with trust fund, muna siya bala class, nag-create trust fund, for example, si Chris Aquino for Bimbe. So, si trust fund, so nag-invest sa kwarta, no, for future use ni Bimbe sa iyang education or sa iyang future. So, si trust fund, ginamanage na sa class, ginamanage na sa, so si trust fund, di ba may kwarta? So, si kwarta gatubo. Si kwarta pwede mo ma-rolling, no, para maka-earn siya income. Hindi man na siya ginbutang lang na to standby lang saan na siya gamiton, nagamit man na siya class, no, income generating man na siya class fund. So it is taxable. Okay, basta gani may income, si BIR ma-tax gid na. Sa estates naman niya, for example, ining si tawo ni na dead, nagbilin siya estate, di ba, si estate, example, wala pa siya na-distribute. Kung i-distribute na siya class sa iya mga heirs, ang tawag na sa tax ng ginbayad, no, sa pag-distribute pala sa estate tax na sa iya class, lain na ang lain na ang estate and donors tax na class nga topic. But si estate nag-i-income na siya class mo, wala pa na siya abi na distribute. So may income pa na siya. Dira naman na iya masulod sa estate. Tax on estate. Nga ginagamit ta diya hambalya, estate and trust are taxed in the same manner as individuals. Okay? So basta gani may income si BIR matax gid na. Liwat class ha. Basta ibalag gagamuulo nyo sa estate. Di ba may mga properties si dead person nga nabilin. Kung wala pa na siya class na distribute, ang ini nga tax on estate ang ma-apply kung wala pa siya na-distribute sa mga heirs. If na-distribute ni siya sa mga heirs, no, sa mga tagapagmana, estate tax ang ma-apply. Muna siyang 6%. If na-discuss nyo na class nga 6% na siya sa inyong estate and donors tax, no? Transfer taxes nyo nga subject. No? Okay. Clear na siya. Okay. Second is the income tax on trust does not apply to employees' trust which forms part of a pension stock bonus or profit sharing plan of an employer for the benefit of some or of all of these employees. Employee trust, the trust na sang gintukod ni company for its employees. No, so hindi na siya class applicable ang ining taxation at trust taxation. Okay? Hindi na siya yan. Third is the tax is computed upon the taxable income of the estate or trust and shall be paid by the fiduciary or trustee. Si fiduciary or trustee, sila ni ang dogin, they are the ones who are managing the fund. Okay? Or sila ang like fiduciary, do ka sila ang manager. Okay, the term is simpler term is the manager. So last is how is taxable income computed? So the taxable income of the estate or trust shall be computed in the same manner in the same basis as in the case of an individual. So same man lang na sila kas. The amount of income of the estate or trust for the taxable year which is to be distributed currently by the fiduciary to the beneficiary shall be allowed as deduction. Any distribution class to beneficiaries will be treated as deduction. So the amount allowed as deduction shall be included in computing the taxable income of the beneficiaries, whether distributed to them or not. Okay, estates and trusts are allowed an exemption of 20,000 from the income of estate or trust. Take note of this 20,000 exemption. Amo ni class ginamin niya class. Gross income ni estate or trust, less expenses, yan na daw mga expenses, less income paid or credited to be distributed to the beneficiary. Kung may ginbayran siya nga income tax or na credit or na-distribute kay beneficiary, any amount na distribute kay beneficiary, that would be considered as a deduction. And don't forget with the mandatory exemption of 20,000, less mo ni sila tanan from your gross income, you will get the taxable income. And that taxable income will be subjected to the tax law for individual. The copies are so noisy. Sorry, good class. Sorry, class. And in case of revocable trust and trusts where the grantor benefits from the income of the trust shall be reported by the grantor. The revocable trust, meaning, pwede ma-revoke, of course. Mag-change siya mind. When we speak of revocable trust class, if you would understand, irrevocable meaning pwede ma-revoke ni grantor, no? Or ni tag-iya balasang trust fund. Okay, sa trust lang ni siya class applicable la kay si estate class wala man ta class revocable estate kay hindi naman na class ma-revoke sang napatay. So this will only be applied sa mga trust fund lang. So if revocable trust ka, meaning may control pa si grantor. Okay? So kung may control si grantor, maka-benefit pa si grantor. So si grantor na nabahala sang income sina, no? i-declare ya. No, revocable trust. Okay, hope it is clear to you. 6, rule when there are 2 or more trusts. So in case of 2 or more trusts, the creator of the trust in each instance is the same person. Same person ha, ang tag-iya sang trust fund. And the beneficiary in each instance is the same. Utang ta, Trust A owned by Mr. X. Trust B still owned by Mr. X. Beneficiary ni Trust A si Y kag Z. Beneficiary ni Trust B still Y kag Z. So, muna sa class. Okay? So the taxable income of all trusts shall be consolidated. Consolidated meaning same man lang ang tag-iya, same man lang ang beneficiaries, but there are 2 trusts or more. Taxable income of those trusts will be consolidated and the tax is computed based on the consolidated income. So, same man lang sila, consolidate mo na lang. Okay, so the proportion of said tax shall be assessed and collected from each trustee which the taxable income of the trust administered by him bears to the consolidated income of the several trusts. Okay, anyhow, sorry for the interruption. Okay. To understand well, we have a problem. We have here Mr. X, rich but sickly, established in December 2018 a trust for the benefit of his son, Mr. Y, 15 years old. He transferred to the trust 2 income-producing partnership properties. So a vacant lot leased for 60,000 annually. So ginalis ang vacant lot, no, gina-parent ya at 60,000 no, income ni class, no, lease income. And second, an official building with a monthly rental of 25,000, both gross of withholding tax. He appointed Mr. Z as the trustee. Mr. Z is the fiduciary, okay? In 2018, ordinary trust expenses total 120,000. Income distributed to the beneficiary amounted to 144,000. The taxable income of the trust in 2018 is taxable income. Usually, class taxable income lang ginapamangkot when it comes to taxation for estates and trusts. But if tax due, then apply the tax table. So, pila ko no iya taxable income. Income on vacant lot, 60,000 class. Kay annually na ni class ha, annually na ni. Then rental on building, monthly rental class. Take note of the terms. Kasi kung annual na di bala dason how. Rental on building, that's 25,000 times 12 months, that would be 300,000. So total income is 360. Last mo lang klasan ng expenses ng 120,000, no, ordinary trust expenses of 120,000. Then income distribution, no, income distributed to the beneficiary, 144,000. And don't forget the mandatory exemption of 20,000. So deduct mo nitanan from 360, you have taxable income of 76,000. Okay. So corporate income tax, we'll see. Okay. Okay. We'll see. Now I still have Tuesday. I still have Tuesday to give you another video for I think first part only of corporation taxation for corporation, and this is quite long. And also plus BIR forms is also very short. Okay, first part of corporation only. So I will end my video here, no, for you to study a tax on estates and trust and tax on partnership. Okay, so I'll just give you some notes. Okay, you can search for problems sa internet if you don't have the book. But if you have the book, no, ampongan, mga textbooks class, try to practice solving, no, sa practice lang for study. Okay? But you can use the module to study. I will end my video here. Thank you and have a nice day.